This is the right time for investors to buy into equities and move out of fixed investments. That's the view from Nilesh Shah of Axis Capital. In a chat with Nikunj, Nilesh also spells out the sectors that you should invest in as the markets price in a pro-reform government and bet on a growth recovery.
In the near term, market has priced in the election outcome, but certainly it has not priced in the long-term growth potential or the improvement in the macro which could come over next 1 year. So if we see interest rate, we expect them to remain stable for next 6 months and then eventually start softening. The CPI inflation number, which was remaining always in double digit or near double digit for last 3 years, now should be coming down reasonably well. Growth, which was below 5% for last 2 years, hopefully next year shall be above 5% and reasonably above 5%. Currency, which was wobbling, now is on the way up. So whichever way you look at from a long-term growth point of view, there are building blocks which have fallen in place, and market probably has not discounted all of that thing. But that doesn't mean that markets can continue to move in a steady state basis like it has happened over the last 1.5 months.
So do you think the last 100 points on the Nifty or the last 200 points on the Nifty are a bit of a stretch?
I wouldn't call it a stretch, but I will call it a zone where you can't be a blind investor. Now probably it's time to look at what has not performed or what has not participated in this rally and look at valuation and trigger, and maybe it's worth building portfolios around those sectors rather than just participating in this rally.
IT and pharma. Some would argue that the reason why Indian IT companies have done extremely well in 2013 and 2014 is because of the currency advantage. Rupee is not at 68, it is at 59 or sub 60, which clearly means that in the short term, IT companies will report a margin erosion. If they will report a margin erosion, sequential growth will get compressed, and instead of growing, they will start degrowing. So what is the investment case here?
So number one, is market already factoring in the rupee appreciation and margin erosion? I think a reasonable extent has been priced in. Could the stock continue to fall for some more days? Probably yes. But then you are trying to build your portfolio of quality companies who have very high corporate governance, who have very high ROEs, who are cash rich, who are unlikely to raise capital, and who are going to participate in their growth curve over a period of time. So you are not building the IT and pharma companies portfolio for today or tomorrow, but probably over next 2-3 years horizon. And nothing is going to change the short-term trend, but then this downward correction in IT stocks especially gives you an opportunity to build a portfolio which will act as a good hedge against the election outcome. The second thing is that the inherent competitive strength of Indian IT companies, is it the rupee or is it the cheap supply of labor which is available to them, and which gives them a competitive advantage in the global markets vis-a-vis other peers. I think to some extent in a certain season probably rupee gives them advantage, but broad advantage does come from this enormous supply of Indian engineers which allows them to compete and still maintain margin in the global markets. And I don't think so that advantage is getting eroded. If at all, it's getting strengthened as the job creations has kind of slowed down in the overall economy. So put all these things together, this correction, and it will continue for some time, gives you a great opportunity to build your portfolio in IT and pharma sector, which in the short term can act as a hedge against the election outcome, and in the long term allows you to buy decent companies at decent valuations.
But Nilesh, I would argue, why buy into IT? Because the season has changed. Sectoral churn is the name of the game. Those who bought into defensives are now really revisiting high beta or cyclical stocks. So maybe if IT underperforms, why should one be with IT as a group?
So as someone mentioned, that it requires tremendous amount of guts when other people are selling and you have to buy, and when vice versa. So probably this is an opportunity which is available in the market today. A lot of people are focused on high beta. You are getting good quality companies at reasonable prices.
So you are a buyer in IT at these levels?
We'll recommend.
Why are you bullish on pharma? Are you bullish on pharma after that Sun Pharma Ranbaxy deal? Is that deal some kind of an indicator of the true potential of Indian generic companies?
I think Indian generic companies overall have delivered great performance. Globally, if we see, this is kind of a multi-year trend. The medical budgets of the developed markets are going through the roof. Their fiscally constrained governments will have to reduce the medical cost without impacting the availability of medical services to their population. It's a population which is aging. In all this scenario, certainly Indian generic companies, Indian pharma companies will play a great role either in terms of product distribution or in terms of providing raw materials for making products over there. And we see Indian pharma companies even today, compared to IT now, they are trading at historically average valuation, whereas IT is actually trading at little less than historical average valuation. But notwithstanding that valuation gap, we still think that within the pharma space, you have some long-term growth stories available which can compound your money for over next 5, 10, 15 years. So it has become must-own part of your portfolio.
Let's talk about PSU banks. 3 months ago it was outright despair. Now there is a bit of euphoria. PSU banks were cheap, but they are no longer cheap. A stock like State Bank of India had gone below book. It is trading well above book now. So for those who are buying into PSU banks with the assumption that a new cycle has started, are they wrong in their assumption?
PSU banks, probably were a very, very cheap about 3 months, 6 months back. But now they have priced in a fair amount of recovery. They have now priced in one, revival of economy, which will reduce the burden of NPAs. They've also priced in some amount of availability of capital for them. PSU bank as a lot today represents under provision, under capitalized lot. And these things are going to come into their performance over a period of time. If we see over the last 15, 20 years, clearly private sector banks and NBFCs have delivered far better return than PSU banks. PSU bank has given that rally in the, spurt of time, short period of time, but that's not sustainable in nature.
The trajectory is very haphazard.
Precisely. So in some sense, you have to buy PSU stocks when they are cheap, or they are very cheap, and sell when they are cheap.
Are they cheap now?
PSU banks are not looking cheap anymore. They are reasonably valued. But, my recommendation is that if you are a long-term investor, just look at the past. The private sector banks and NBFCs have outperformed PSU banks over 5, 10, 15, 20 year period of time. Why bother about PSU banks where the volatility of earnings will be very high? You play that via mutual funds and insurance companies rather than playing yourself.
So one avoid is consumer staples, the second avoid is PSU banks. Where does power fit in? Power stocks also have seen a strong and a robust rally from the recent lows. Now, if I look at the basic economic data which is staring at us, the economic data is that we still have a lot of overcapacity. Power demand is low. There are no fuel linkages. If the underlying demand for power is low, what explains a rally in a BHEL or Crompton Greaves, or Thermax, or for that matter, Voltas?
So, a lot of the stocks which you have mentioned, they have rallied for other than the immediate sector outlook. So there are talks about sellout, and that's promoting certain stocks. Certain stocks have outperformed because they were so much cheap that they've just bounced back. My feeling is that within this engineering cum power universe, you will have to focus on value.